How do I report grants and loans for my business tax? When you're running a small business, knowing how to handle grants and loans on your taxes can make a big difference. It helps you stay compliant and avoid surprises when tax season arrives. For Black families and entrepreneurs, understanding these rules can protect your income and help you make the most of your resources. Most grants you receive for your business are considered taxable income by the Internal Revenue Service. That means you need to report the entire amount of the grant as part of your business income for that year. For example, if you get a $10,000 grant to grow your business, you should include that $10,000 when you file your taxes. There are some exceptions. Grants received by nonprofit organizations that are tax-exempt under IRS rules are not taxable. Also, certain COVID-19 relief grants like the Shuttered Venue Operators Grant and the Restaurant Revitalization Fund are not counted as taxable income. Additionally, grants given by a federally recognized American Indian tribe to expand an Indian-owned business on or near a reservation are not taxable. If you're unsure whether your grant is taxable, check your grant agreement or talk to a tax professional. It is important to keep good records of all grant documents and how you use the funds. This way, you can prove how the money was spent if needed. Loans are treated differently from grants. When you receive a business loan, you do not report the amount as income because you are expected to pay it back. For example, if you take out a $20,000 loan to buy equipment, that amount does not count as income. However, if a loan is forgiven or canceled, the forgiven amount may be considered taxable income. For instance, if you receive a Paycheck Protection Program loan and the government forgives part or all of it, you generally do not have to include that forgiven amount as income on your federal taxes. But some states may treat forgiven loans differently, so check your state tax rules. Interest you pay on business loans is usually tax deductible. This means you can subtract the interest from your business income, which can lower your tax bill. Here are some practical steps for Black families and entrepreneurs. Always report grant income unless you are sure it is exempt. Keep detailed records of all grants and loans, including agreements and how you use the money. If you receive a loan, do not report the amount as income unless it is forgiven. When a loan is forgiven, check whether the forgiven amount is taxable at the federal or state level. Remember to deduct interest paid on business loans to reduce your taxable income. If you're unsure about your tax obligations, consult a tax professional familiar with small business and family-owned business needs. Following these steps helps ensure your business tax reporting is accurate and that you take full advantage of available tax planning options. This approach supports your family's financial goals and the growth of your business.